Legends! Welcome, welcome. Sorry, let me get my screen going. I do this every time. I flick over to the screen and I forget to refresh it to get it started. Hope you're well, wherever you are. Richard, there you are, legend. Good morning. Happy FOMC evening. It is morning over here, the 11th of December. It's probably the 10th, wherever you are. Rich, hope you're doing well, legend. So, welcome to the Daily Buyer Show. If you're new here, we dig all charts as they relate to crypto, and I give you my bias, structure, levels, the bigger trades I'm looking for, all in an effort to share and hopefully help you see what I'm seeing throughout this wild, wild west we call crypto, hey? So, FOMC this morning. Midnight. Yeah, I know. That's a killer, man. I appreciate you for being here. Seriously. So FOMC came in, right? And if you've been here with me or on my X over the past days and weeks, we've been talking about the volatility window, especially given the current phase of the cycle that we're in, the liquidity constraints that we've been seeing impacting the markets. And FOMC today was one of the key volatility drivers that we'd been anticipating and waiting for, right? So I did a quick summary here based on my interpretation of Powell's speech, along with a little bit of help from Grok and ChatGPT. And in my interpretation, so we got the 25 basis points cut as expected. We talked about that yesterday. Market already expected the 25 basis point cut, which is usually highly accurate. What I took from it was Powell sounded slightly dovish, I would say, in his speech, but on paper, it was hawkish. So it was a hawkish cut on paper. So you had split vote, which is structurally hawkish, right? So you had a split vote on, call it the dot plot and the projected rate. Inflation still a little bit above target, but they seem to be okay with that. But Powell's dovishness came by way of labor market risks and some of the stuff he was talking about. However, only one more cut next year, right? So if we go to the probabilities here, the probabilities are anticipating 2 more cuts, but I believe somewhere he may have mentioned 1 more cut next year. I guess the only certainty there was no hikes expected next year, still data dependent. But all in all, it kind of landed me, and with Grok and ChatGPT's help of analyzing sentiment on X, etc., it landed me kind of mildly hawkish on my read. So some dovish sounding commentary, but on paper and based on the data presented and their approach, still mildly hawkish. And if we go back to what we went through yesterday, right, I built a bit of this kind of, what would you call this? Maybe a little bit of a cheat sheet or some thinking around expectations. And there was really only 2 bullish scenarios where you get a cut plus dovish Fed, dovish Powell, which ultimately would lead to the market expecting liquidity, and that would potentially be the risk on bullish environment. Or if he cut greater than expected, we talked about that potentially being, especially in the short term, interpreted as max bullish, right? But under the hood, we'd need to be assessing, why are they cutting so drastically? Is there recession concerns? But essentially, those were the key 2 bullish potential scenarios. And in my opinion, we kind of landed somewhere here, cut neutral, potentially cut hawkish. And if you just look at how the market's reacting so far, it is, I would say it kind of aligns with that, right? We had let me just go down to the 1 hour, and you can see some of the volatility here, right? So this was the FOMC through here. I'll just highlight it, right? So I'll call this from round about, this was all leading into FOMC, right? This was the FOMC here, right? So this was the Powell speech candle, basically. And we talked about this. We talked about leading into the FOMC, it's going to be volatile, and the most volatility is going to come when Powell is speaking, right? And we see it here, but ultimately, when I was looking at kind of the patterns playing out and the general trajectory, right, we're not really seeing an immediately bullish reaction. And look, it is still very early. Like, it will take at least a few days for the market to digest this. However, that's just where my initial read is sitting, is mildly, I'd say mildly hawkish, hence has me leaning a little bit more bearish. But the key thing is, by the end of this week, we're starting to get the first data releases for the balance sheet. And this is where all of the big speculation is on X at the moment. You've got so many people calling it QE right now. The money printer's turning back on. And that might be the case. I'm not an expert, macroeconomist or anything like that. So that well and true might be the case. However, I am someone who just looks at charts and data and tries to validate the stories that are being told in the data. And to validate that story, setting aside opinion and speculation, we need to see it in the balance sheet. That's just all it comes down to. If they are doing QE or stealth QE or money printing, then the balance sheet should increase. So hence, as I've been discussing, the volatility window, I would say the major event is now done. We need to digest the major event, and now we've got call it maybe the minor events or the kind of side-by-side events over the course of this week and then next week leading into Bank of Japan. Okay, and over the remainder of this week and next week, we'll also get a lot of that data coming through to essentially tell us the two main things driving our net liquidity indicator, and it is QE, is there actually stealth QE going on? Or is it really simply just QT ending, right? Is it just going to be a flattening of the balance sheet? Or are they doing a stealth QE, which should start lifting the balance sheet? The other thing we were monitoring is the government actually going to start spending? Because they did refill again last week, but do they start spending and essentially driving more liquidity into markets? So essentially, the main volatility driver is done. Now we'll see it in the price action and we'll be observing net liquidity. Quick around the grounds, if we start at my risk dashboard, so this basically plots Bitcoin, RTY, and NVIDIA over the NDX and the SPX. Because if you're looking at our key risk markets, the NDX and the SPX will actually top last into major turns, and I've back tested this right back to the late 90s. These will top last, and if you look at Bitcoin, RTY, and NVIDIA, and you use them somewhat as a gauge on the spectrum of liquidity, Bitcoin being the fastest signal on global liquidity flow and sentiment, right? It usually always tops first. Okay, and we've already seen that top come in. The RTY usually tops just before around 30 to 90 days before the NDX and the SPX. And NVIDIA often will bearishly diverge from the SPX if we're coming into a major turn. Now, Bitcoin's already given the early signal. If you pay attention to the RTY here, it's just peaked through the all-time high, and the last time it did that was in 2021 here, you see here, not long after that, the indices took a tumble, right? So these are all the things that are on watch, and NVIDIA is starting in early stages to diverge bearishly from the SPX. Now, we never jump ahead, right? These are not confirmed signals yet. These are just cautions. These are just some of the signals we use to try to anticipate and understand the flows, the global flows of capital moving through markets, right? And use these pieces to tie the story together so that we can invest and trade efficiently, right? And try to be on the right side of the market as much as possible. So hence, we are seeing those warning signs and we're still in that cautionary period. And I believe that over this week and next week, as the data flows through, we can analyze our net liquidity, see if we're seeing, any type of rise, or if it's flat or worse, declining. That's going to give us a good read and gauge on the potential trajectory of where the risk markets are going to go next, right? If you've been keeping up with me, you know that I'm in the camp of macro bearish Bitcoin. However, we could see some relief or potentially a counter trend rally, and that's all hinging on what this short-term liquidity picture looks like. So hence, I've been saying it over and over and over, and I know sometimes this is the hardest part in trading, patience. You got to know when to exercise patience as a key discipline in this game, and when to sit on your hands, observe and wait. And I'll show you exactly what I'm waiting for. Right, so Bitcoin at this point in time, we talked about this on stream, I believe yesterday, maybe even the day before. But if I come back down, I want to get a clean chart up on Bitcoin here, right? And I want to just direct your attention to the weekly chart, okay? So since this point in time, since this last 3 weeks, I've been saying we're entering the volatility window, okay? With FOMC and the major macro calendar leading into December, I've been saying volatility window, let's let the market show its hand, because it doesn't pay to be a bull right now. Macro structure is bearish. It pays to be a bull and to be more aggressive with premature positioning into risk in these bullish phases, not when market structure's shifted and we potentially have a transitional market. It doesn't pay to be a bull there. What pays you is actually to protect your capital, right? To not jump into markets prematurely, not front run any potential signals or anything like that, right? So hence, when we look at the weekly here, we see that our first sign of a pause was this inside bar that appeared, which shows that we may be getting some compression, some consolidation, okay? And then it led into pre-FOMC week, which was last week. And what do we get? We got an outside bar, okay? So the outside bar to me is an indecision candle. It's not an actionable candle because it means both sides of the market, buyers and sellers, took a crack at taking control, but failed, okay? So with this combination, inside then outside bar, there's a battle going on here to see who's taking control of the market. And if you consider the fact that that's all aligning with our major macro events now being FOMC, this is where we want to see where the market's going to show its hand. And if you recall, I mentioned that we've got to be watching, whenever you see an outside bar, we've got to be watching the extremes of the candle and price action around the extremes. And I said that as we come into, for example, if we're coming into FOMC, if FOMC hits and we're playing around with the high, the extreme of the high, we've got to see what happens here, because if this week closes as a sweep of last week's high, then that increases the probability of a bearish following week, because first and foremost, you got to remember our macro structure like this. Okay. Second, you got to remember that we haven't created our next weekly lower high. Third, now we have this validity as a potential structure point if this week, because we've got two candles here. This is, I would still consider this as a candle now for structure. Now we've got at least 2 weeks of consolidation. Now, if this candle comes in and sweeps this high, I'm more eager to jump in on the short side because I'm trading with the macro trend. So hence, post FOMC, post this weekend, when we get more data, I think the market's really going to show its hand here. And if it ends up resolving as a sweep of last week's high, that tells us that the bulls aren't really taking control of the market, and either sellers are stepping in or the buyers are losing significant demand here. There's not enough demand. And that suggests to me that we could be at the very least revisiting the other side of the outside bar, right? But potentially, considering the macro structure being bearish, potentially testing the lows or going for continuation, okay? Down here, right? Somewhere into here. So hence, this is specifically what I'm watching over this weekend. Now, on the flip side, to be bullish, because we've already swept the high, okay, this can no longer be an outside bar. The bulls really have to get above and close above this high. Otherwise, this ends up being a sweep of the highs. Now, if we get a nice candle that closes like well above the high to signal strength, then that to me is going to start shifting my short-term bias for next week to start positioning for a potential Santa rally going into Jan. Okay, so hence I'm watching this week closely to see how we close. And unless we get very strong acceleration before even the end of the week, and we're just trading strongly up here or moving up, etc., like we'll, again, if you're here with me every day, we'll analyze it as we go. But unless we get very strong acceleration above this high prior to the end of the week, I'm pretty much sitting on my hands to see how we close relative to this high now that we've swept it. That's basically where I'm at in terms of Bitcoin right now. We've got the catalysts, the major volatility catalysts have hit. So patience is the trade. Now let's just quickly revisit the flip zone, right? So we're coming into through here, all through here, right? So as we take out these highs, we're coming into basically what I would call key supply, key resistance areas, right? And we called out yesterday on stream that this would be the major flip zone. So unless new weekly structure comes down, creating a new lower high, we get back above the high to be bullish. Unless, if we do that, we can be bullish. But if we don't do that and we just keep pressing higher, then this is where I'm observing this flip zone, where if we can clear the flip zone, we're back above the bands, back above this weekly fair value gap. It's potentially holding as support. The bands are holding as support, and then we're putting in some failure to break down further signals and heading up, then that would start me flicking my bias to potentially be looking at the highs. And of course, I'll be looking at the broader signals as well, right? So you legends know all the different signals that I track. We go through them in most streams. I know I haven't gone through them in this stream just yet. Okay, so that's basically what I'm looking at. And the other side of this is this flip zone also becomes our major area for a short as well. So if we're underside into the bands, underside into here, we're kind of struggling, losing momentum through here, right? This sort of thing, I'll be looking to build my short down towards here and potentially for the bigger macro continuation lower. Right, so essentially, my plans are based around short-term bullish counter-trend potential, okay? And the signal I'm waiting for, the main signal I'm waiting for is to watch how this week closes, right? So again, if we sweep the high, then I'm going to be less incentivized to jump into the market bullishly next week or looking for the counter trend. Okay, I'm actually going to be more inclined to look for shorts and potentially just targeting down back into the lows of the range here. However, if we get a nice strong close above this high, then I'll be more incentivized to look to participate in the counter trend longs across alts. Okay, so that's my bias with Bitcoin. That's basically what I'm watching right now and how I'm looking to digest and anticipate what the market is going to do next, right? So I'm basically just waiting for it to show its hand. Now, I know this is a bit backwards. I go through the macro charts first, then come across the crypto, but we'll just finish off on a few of the other key charts, just the key ones to be tracking right now. Of course, Richard's going to love this one, the stablecoin dominance chart. This is our favorite chart that we're looking at the moment. We know that if stablecoin dominance is just doing something like this, and it's going to head back up, then it's a massive bear market. We're going much lower. But if stablecoin dominance is coming down into these levels, this is significant liquidity, internal crypto liquidity, to fuel the counter trend rally thesis. Okay, so hence we're watching this as one key signal. Now, outside of crypto, I'll direct your eyes to the DXY. Right, so we've been tracking the DXY and the cycle ending pattern on the DXY, where we come down and we base and then begin the macro bullish trend. You can see it here, base, double bottom, macro bullish trend. So I've been calling out that the DXY back above this level is the continuation on the macro bullish trend, meaning we're probably going into that deeper bear market, right? And there's risk to, I'd say there's even risk to global markets trending back above here, okay? From here to here is, for me, probably our play zone, right? Where it supports the counter trend rally thesis. And given that we just had a rate cut, it makes sense for this to be coming down now. It makes sense for weakness in the dollar, because that's ultimately what rate cuts drive, right? Weakness in the US dollar. Now, I've mentioned in the past that below this level could invalidate the pattern, right? The cycle ending pattern, but we can't just assume that if we're breaking down below this level here, that it's bullish for risk markets. We'll need to be analyzing broader signals at that time, because recession concerns, if there are recession concerns in market, it doesn't matter how weak the dollar is. The dollar weakness is not due to capital rotating into risk. It's due to capital fleeing from the dollar because they're concerned about the US economy. Hence, as we're approaching this level and trending below, that's the X factor we need to consider and be analyzing for, not just blindly assuming because the dollar's breaking down that it's going to be bullish for risk, right? The last chart that we'll take a quick look at, actually no, the last few charts we'll quickly scan through is USD JPY. Okay, so at this point in time, no cause of concern because it's been bullish, right? Daily structure still remains bullish. We are still in somewhat of this range with structure looking like this, pullback, all within character of a bullish trend at the moment, but we are just monitoring for any type of sharp breakdown in the USD JPY, because that would put strain and risk on global liquidity as we potentially consider a carry trade unwind. So at this point in time, no concerns here just yet, coupled with the Nikkei pullback, but as we've been kind of keeping up with it, this is still a very bullish chart. There's nothing to be concerned about just yet. Okay. Bank of Japan, when is that? Next week, I believe. Bank of Japan, Friday. So it's the end of next week, right? So we're likely to see some volatility around that. How much volatility, I'm not sure. I think that this week and even early next week, we'll see a lot of the more certain trajectory emerging in markets, in my opinion. Okay, but again, we'll just analyze the data as it comes through. Last but not least, the RTY. Okay, this is the main thing I've been watching, because this looks like a pretty decent breakout on the daily, right? That's a strong daily candle, right? So if we look at that, like that's a decent close beyond the level. So if we just take a look at the futures, right? Same, we had a decent close beyond the high. So that's a strong close. We've been SFPing. We've obviously squeezed this up. So now what we want to see is this level, right? This is the internal dailish level. This is the internal daily bullish structure level, right? We want to see that hold, okay? And for this to not just fall back under into the range, like that would be a big distribution risk. Hence, above here is good. Above here is still good. Concerns, right? Back here, because are we just then heading below the major multi-year all-time high again, right? This would be a big distribution risk signal. Okay, so hence the RTY is on watch, but so far bullish is okay, right? It beats bearish. It means that it supports the counter trend rally thesis in the short term. So obviously, if this was just straight rolling over, then that's our next signal on our risk dashboard. Okay, that we've got Bitcoin. Now we've got the RTY rolling over, which is another extension of risk. Okay, Nvidia is starting to give its bearish divergences. So hence, if the NDX and the SPX roll over sooner, don't be expecting Bitcoin to give much in terms of a counter trend rally. So hence, so far, signals are still holding up. So we still have case for the counter trend rally. I guess just summarizing and ending there. We continue to observe this week. Personally, sitting on my hands, being patient, observing that the Bitcoin weekly close. Follow me on X. That's where I'll post my updates in the interims between streams, obviously. And yeah, we'll be back for the next one tomorrow, legends, same time. Thank you for joining me. Like, comment, subscribe, all that kind of stuff that helps out the channel. Appreciate you, Richard. I'll speak to you soon, legend. And follow me on X if you can, legends. Thanks again. Take care.